Ever since we got this breakdown here in October, it was looking like, or my opinion was, that we had to test the bottoms in the SPX. And therefore this bounce here I didn't take too seriously. I didn't even take this bounce all that seriously here. It was looking like we may double bottom, but as soon as we got the break of this here on Monday, we did have the bottoms here, which were a potential turnaround point, but we already had the Russell breaking down, which reduces that chip possibility. And plus we set in a price pattern here, right? That gives us a target down here at around 2380, 2390. And we also have a little bit of support in the XPX here at this level. We'll show this at the longer term time frames. Now the reality is that we did more or less complete this price pattern target, but if we look at our longer term charts, we have, let's just go to just a 3-year for now. Look at our longer term charts. We have this upper or this larger price pattern here, which I call the bottom. This point here about 25.35. If we make projections on that, that brings the market down to about 2100 to complete that price pattern target. We have some minimal, I call this very minimal support here on the level that we're at now. That could allow the market to bounce. We have a major moving averager coming into, again, minor support. It could promote a bit of a bounce in the market, but realistically, in order to support a move like this, we need something significant. I don't think that, other than maybe a dead cat bounce off of any of these areas, I don't think that that's going to go anywhere. Our more significant support here, if we look at our monthlies, I'm just going to bring in an all-time chart. And this is, when you look at this, you can get a bit of a representation of how overextended the market was. Realistically, we should have had a bigger pullback in 2016. It reversed. It just kept going higher, and we were just ridiculously overvalued here. And the first real support area, or support that's anything near significant that may stop the down move, realistically, in my opinion, is at about 2100. We have a chance of stopping the down move here. More likely, we're probably going to see the bottoms of 2016, and I wouldn't even be surprised if some point next year we see the tops of our 2007, 2008 area. This would be a very, very hard support area. Excellent place to pile any cash you have into the market. Again, that's not a recommendation. That's just my opinion. Personally, I'm buying some here. I'm buying more here. If we get to here, I'm going to get very, very, very aggressive at buying things like stocks, and we'll talk about that in the FIT program when we start talking about investing. But a little bit here, a little bit more here, and here we're going to get just really strongly in the market, and probably take a loss if the market decides to come down into here. But longer term, once that reverses, it should be fairly significant. So Andrew is just noting that the last two bear markets have retraced 50%. Right, we're at about 30% retracement. Just to put things in perspective, right? We're at round numbers. We topped out at about 3,000. 30% off of that's what, 900? That brings us to 2,100. That would be a normal market retracement. The last couple markets being retracing about 50% brings us at about 1,500, which is where our primary support areas are. So none of those would be terribly unusual, right? And realistically, I thought that we were going to get a realistic retracement in 2016 or 2015, but this was ended up being minor. Now we're, like I said, we were just terribly overextended. We're still, in my opinion, a little bit overextended to the upside, despite the fact we've had some really big down moves. I think at best we're going to do around 2,100. Now that said, the economy is doing really well and everything, right? So it's possible we don't reach there. And also with the economy doing really well, unless something happens where we get some sort of deterioration in the economy, we very well may support at 2,100, 30% retracement, which is why we don't know where the market's going to be dropping, which is why I'm buying this range a little bit. I'm planning on buying this more heavily down in here. and this, like I said, this very well may be a decent area to turn around if we even get there. We don't know that for sure, but my best guess is that we're coming down to at least here. We'll have to see how we react. We should at least level off here for a short time even if we're going to go lower. So, we'll see how that goes. And so that's the SPX. Those are my thoughts on the SPX. Basically we could get a bounce, but any bounce I would expect to be a dead cat bounce. If we start pulling up into 2,600, that would be pretty bullish. I'm thinking at that point that we'd probably maintain a sideways range or go higher if that case were to play out. I think it's highly unlikely. But, like I said, we don't know where the market is going to go. If we take a look at some of the other indexes we'll just look at them in the long term, because ultimately we have a long-term thing going on. If we look at the Dow, again, a representation of how overextended we actually were. And if we look at our price pattern target, right, we just broke down out of this price pattern. That puts us at about 1985, 1980-ish. Realistically, we don't really have any support in the index on a monthly level until about a little over 18,000, which is likely where this is going to bottom out. Possibility at the bottom of the price pattern target, we'll see. If we just zoom in to something that's a little bit closer, you can see the breakdown here. This is the price pattern target of this topping pattern. Potential stopping point, we have some, a little bit of consolidation here, which may provide something, but realistically we don't have anything solid until, in low 1800s, which is likely where any kind of a major sell-off is going to go. Again, the economy being good, the S&P turns early. This could certainly turn early, but that's what the patterns are showing us. We have on our NDX, realistically, this just barely started breaking down last week. This is, by the way, too, if you look at this month, this is the largest point drop we've seen in the SPX ever in a month, I think, which is, from a percentage standpoint isn't bad, but from a point standpoint it is. And, our trades are essentially sensitive to points. So, we can be a little bit more sensitive there. So anyway, this has been to its breakdown point, price pattern target of 49.30 area, and realistically major support at 4,600. So if we get an extended down move, that's where we're likely to go. Again, first key clue of maybe the market might reverse is if the NDX holds up better than expected. Right, the NDX is going to be the first to go bullish. Realistically, we get the NDX up over 6,500. That's going to be bullish for the index. Whether that's enough to halt anything else, I don't know. I doubt it. But this will be our first sign of a reversal here. And coming back to the Russell, we did have some. We had a pattern breakdown here that gives us a target of 1190-ish. We do have some fairly significant support, or we had some fairly significant support here. We slashed right through that with the SPX breakdown. That's not going to hold it. If we look at long-term here on the Russell, you can see how minor this support area is on a monthly chart, right? Down into here would give us definitely coming into some decent support down at the 1250. Realistically, I believe we would complete this price pattern target and be down in the 1190s. And we do have some fairly significant support down in here. So if the SPX holds high support, we might hold that. If not, we're looking at our next level, right, is about 945, and our really hard support is about at 850. We're currently, how much of a percentage is this here? So 1,800 to 1,230, that's too much for me to figure out in my head right now. That's going to be, about almost 30% on the Russell. If we come down into here, then, we're looking at maybe a greater than 50% retracement here on the Russell if we if we make a run for this area. But those, you know, I would watch for all the markets coming into one of these areas at the same time, and that'll likely give us a good bounce in the shorter term. But that's my longer term stuff, and we know that the Russell broke down early, right? The Russell's been broken down for, if you look at the weeklies, it's been broken down. It broke down last week, or you could even say almost 2 weeks ago, but definitely definitely the week before last, and then last week it continues to come down. So those are my thoughts on the market longer term. It's appropriate for near the end of the year here to take a look at that. And again, those are my thoughts. But we, you know, don't put too much into that because we don't know where the market's going. There can be news that can come out that can push us either way.